Hello, good evening, everybody. Welcome back to my YouTube channel. This is Godiva. So today I'm going to be doing a video of the basis of what I use for trading, the basis of my trading strategy, which is what structure. So we're going to be learning a bit of structure today. I just want to explain some stuff to you, which I think it will be good for you to understand and what I've been learning so far. So today I'm currently on GBP JPY on the daily time frame now. Currently on my phone, I'm using my phone to record this video. Currently on JPY on the daily time frame, and so we are going to be discussing structure. If you zoom in, you are going to see that structure on this daily time frame. If it was the laptop, I believe we will see clearer. But structure on this daily time frame, if just the way we are looking at it now, is not really showing us a direction. I think price is currently ranging. If we see this place, price is not moving anywhere. Price is currently ranging. And then before we now see a move upward there. So that is what basic structure that is what structure is. So there are different type of structure we need to know. First of all, one will be a bullish trend, which is higher highs, higher lows, higher highs, higher lows. That's a bullish trend. And then the other one is a bearish trend. So the other form of structure is a bearish trend, which is, how do I draw that one now? One, yes, lower low, lower low. Sorry, I'm not a good artist. I'm not be able to draw correctly, but I'm just trying to explain what structure is. Downward trend, when price is trending downward like this. Okay, yes, this is what a bearish structure, a bearish trend. And then we also have another one, which is price is not going anywhere, ranging. Price is in between. Price is not moving, it's not trending, it is not trending upward, it is not trending downward. That is, price is sideways. This one is called sideways movement. Currently, that's price is ranging. It's not breaking structure, it's not moving anywhere. So that is the basic of the structure we're going to be talking about. We have bullish structure, we have bullish, which is upward, and we have bearish, which is downward, and we have what, ranging, which is moving sideways. Okay, those are the three basic trends that we're going to be talking about today. So the first one, let's use this GBP JPY currently as we are seeing now on the daily time frame. We can spot that in this part here, we are seeing that price is not moving anywhere. Price is what, ranging. You see it here, price is bouncing up and down. Price is currently ranging. And then before this movement now broke out of this range, we saw that this move here broke out of this range. So until, okay, this movement that broke out of this range and now was discontinuing this range that we had there. Now on on our bullish trend, we take our bullish trend from here. We see high was created there, and then price move back. See another one, price move back. See another one, price move back. Currently, we see that price is going back up again. So what is basically structure now? Now, if we have a bullish structure, to make sure that a trend is bullish, there must be a break of structure, which is, assuming we have a trend like this, bullish structure now is what we are going to talk about. We have a movement up, price will come back, again, which is called a retracement, Okay, this one is an impulse correction, impulse correction, impulse correction, or you can call it an expansion retracement, expansion retracement, expansion retracement. So that is basically it. They have several names that they call it. Now, to confirm that a trend is bullish, it has to break a previous structure. Now, this is a movement up, which is what, an expansion or an impulse movement. So for price to continue this straight impulse movement, it has to also retrace back. The reason for it to be doing this is because price does not just move straight ahead like this. It has to go up. It has to move in a step case manner. It has to move and retrace, move and retrace, move and retrace. It will not just be going straight like that. That is the basics of it. Price will not just be going straight like this. It has to move like this and then retrace back, move and retrace back, move and retrace back. So that is how price moves. So that is the basis of it. So if you already know that price moves in an impulse and retracement, or impulse or correction. So therefore, when there is an impulse, we'll have to wait for the next correction. When there is now an impulse, when you determine that this is an impulse, there has to be a correction that follows. And then the next impulse will also break above this first move, this first impulse. This next impulse now must break above this first one. That is what a structure is. Let me explain again. Now we have an expansion or an impulse. It is called an expansion or impulse. Okay, we call it an expansion or an impulse. Now this is our expansion, showing that price is moving upward. Like we said just now, price will not just be going straight. It has to also retrace back. Price is not just going to be moving in a straight line manner or in a parallel manner. I don't know how I'm going to say it. It has to move and then retrace. It has to move and then return back. It has to move and then return back. It will not be like a step case. So that is how price movement works. Now, to determine a bullish trend, it has to first have an expansion and then it will retrace. Now, this retracement must not break below this where this expansion starts. It must not break below this where the expansion starts. And then the next impulse must break above this high. This high that caused this retracement. Okay, now for a bullish trend, there has to be an expansion, which is also called an impulse. And then after an expansion, what do we expect? We expect a retracement, which is also a correction. So price will correct back or retrace back to some extent, and then after the correction, it will also expand again. You understand? So this correction must not break below where the expansion first of all started from. So this expansion must be within year and year. And in this case, within this low and this high is called a trading range. It's called a range. Within this low and this high is called a range. So this movement, which is an expansion, and then a retracement. Retracement will be within this trading range. It must not be below it. This retracement must not break below this trading range. That is how we get our structure. Now, after we have gotten our retracement and then price will break out, to confirm that this is a bullish trend, price must break above this high to create a new high and then retrace again. And when the retracement is coming back, it must not also break below this range, this trading range. Now the retracement must not break below it, and when the retracement, when it has exhausted, it will also expand and break above it. So that is basically a trend. That is how we determine our structure in a trend. That is, so if we want to also do it in a bearish manner, it is also the same thing. So we say price is moving downward and then it created a low. It will reverse, it will retrace back. It will retrace back. We know that the price started from here and it got to this place. Now this place, now it has to retrace back. This retracement from here and here is our trading range. This retracement must not break above this low that was created before. So price will get to somewhere there before there, and then price will come back. And then for it to continue to show that it is really a bearish trend, this next expansion must have to break below this low. Now, after we get a breakout of this low, here is now this new expansion now is now called our new trading range. So this place is now our trading range, and then this place is also now our trading range. Now for the next retracements to occur, price also has to retrace back. It must not also break above this part. It will get to somewhere there and then continue the trend again. So that is how price movement works for a bearish movement. And then for the sideways, price will just be moving. It will not give you any specific direction. It will go bouncing off of a resistance or a support zone, bouncing off of resistance and support. So it's not really showing you clear direction that it's going to break above. It's not breaking highs, it's not breaking lows, it's just within a range for a specific period of time. That is it. So that is the basics of structure today. Now let me just show you how it is on the chart. Now let's take this daily time frame. Okay, let me go to 4 hour so that we can see clearly. Currently we can see that on this trend we have an expansion, and then we have a retracement. We also have expansion again, we have retracement. Also have expansion, we have retracement. Price retrace back, and then we also have expansion. This is showing us that this trend is bullish. So for we now, after we have seen an expansion that broke a high here, we saw that there is an expansion that broke a high here. So what will be our next thing we should be looking at? We'll be looking at a retracement after a price after expansion breaks above a structure. We'll be waiting for price to retrace back, and once price retrace back and it get to some extent, we'll be expecting price to also what, continue that move that broke the first structure. That is basically what structure is. So in my next video I will also be building more on it. Maybe this is the first video I did. It might be too lengthy so that the video will not be too long for you to understand. So please, if you want me to continue posting all my thoughts and all my journey, everything I've been learning so far, please comment, like, and share this video to your friends and family. Let them come and join the team, and then let us do it together. Thank you very much. My name remains Godiva. God bless you. Till we see next time.